Welcome back to the Junior Small P channel, everybody. Interesting news this morning. I haven't seen anything take place like this for quite a while, especially in the commodity markets. This morning, the gold trading was temporarily halted on the CME, and apparently the reason for the halt, get out of there, was this product here that we refer to as gold. It's a, for those of you that don't know what it is, it's a rare precious metal commodity that is traded on the open market. Now what happened was the gold trading was temporarily halted on the CME, the commodity exchange, for 10 seconds this morning. I don't know how you just halt trading for 10 seconds, but let's just read this and you guys can discuss it down in the comments. Nemo, you can pitch in. I kind of really enjoy reading your theories as to why certain events take place. So go ahead, elaborate, and leave a couple comments, Nemo, so we can maybe look into the dark side of why this occurred. Let's read the article now. Now this is on Yahoo Finance, or finance.yahoo.com. Gold trading was temporarily halted on the CME for 10 seconds this morning at 8:42 a.m. Eastern Time for a stop logic event, according to Bloomberg. A big trade knocked $25 off the price of gold in a short 2-minute span, triggering the event. Stock logic detects potential market movements caused by the triggering and trading of stop orders, where the resulting price move would extend beyond an exchange-specific threshold. The triggering of stop orders can potentially exaggerate price movements in temporarily illiquid markets. When triggered, stop orders attempt to move the market to an executing price beyond pre-established value. A stop logic event occurs. Stop logic detects these situations and responds by placing the identified market in a reserved state for a predetermined period of time, usually 5 to 10 seconds, depending on the instrument. During the reserve period, new orders are accepted and an indicative opening price, or IOP, is published, but trades do not occur until the reserve period expires, thereby providing an opportunity for participants to respond to the demand for liquidity. At the end of the reserve period, the instrument will reopen and matching will resume. Stop logic will not prevent markets from ultimately moving in the direction of the order flow, but allows time for liquidity to enter the market so that new orders can be matched against the triggered stop orders. The chart below shows the drop in gold along with the big spike in volume at 8:42 a.m. on the subgraph. Miller Tabak Chief Technical Market Analyst Jonathan Krinsky says technical patterns imply a move downward to 11.10 or 11.20 an ounce, 12% lower from current prices. That is interesting. If anything, I think it marks an opportunity, a buying time for those who have not been able to get into the gold market at levels that we haven't seen, such as this, since around 2008, 2009, 2010, down in that range. So this is 3 or 4 year ago price levels for gold. As you all know, we all have our different economic beliefs. That is a nice sound. Anyways, a lot of us do acknowledge and agree that the value on gold outlasts and outshines that of the paper markets and that of the establishment, the central reserve banking system that we currently exist under. It really is the representation of, I guess you could say, economic ideology. Either you understand and you do believe where gold lies in the realm of economics, or you don't. And I think once you open the Pandora's box of diving into the history of economics, banking, the founding and creation of the Federal Reserve System in the United States, it's pretty hard to go back and kind of put the lid on it. It raises a lot of questions, and this is I guess I really don't know what the purpose of this video is. We kind of just did a quick news briefing, and then now we're kind of just discussing gold a little bit. But if anything, take it more of like a motivation to keep on keeping on and not even worry about it. Don't even let it get you down. Heck, government shutdowns in day 11 shows you how well they have their stuff figured out, and these are the people that are managing our economy and our country. One other little tidbit of news, as you all know, they're going to replace Mr. Benjamin Bernanke, or Benjamin Bernanke, old Ben, Helicopter Ben, the bankster, Bernankster. They're going to replace him here pretty soon with a woman. I forget her name. I just saw it in the news the other day. Anyways, there's going to be a new Fed chairman. She was on the board of governors, so she's a Fed governor, etc. I haven't looked into her history and her background yet, but I'm pretty sure she probably worked for a big bank somewhere along the line, right? I mean, she's either a JP Morgan associate, or she worked for Goldman Sachs or something of that nature. Who knows? Isn't that how it works? Or is that usually how the Treasury secretaries get hired? I lose track. Anyways, we'll see how it turns out. We'll see what kind of economic policies she implements and how that moves gold into the future. But as always, keep your eye on the prize. Old Liberty there. And take care of yourselves. Keep on stacking. Keep on doing what you're doing. Work hard. Stay out of debt. And stay in touch.